Gold has been on a tear, and while it's recently pulled back from its all-time high of $3,167, the bulls aren't going anywhere right now. Gold is trading just above $3,000, and some of the world's biggest banks are calling for even higher prices ahead. Deutsche Bank, Standard Chartered, and analysts from Sprott are all raising their forecasts, and the reason isn't just inflation anymore. It's about trust, sovereignty, and the thirst for physical gold. Let's break down the most recent price predictions and what could drive gold to levels we've never seen before. In a recent update reported by Reuters, Deutsche Bank made headlines when it said, Deutsche Bank sees gold prices hitting $3,700 an ounce in 2026. That's a huge revision, and they're not alone. According to the Economic Times, Standard Chartered sees the move happening even sooner. Standard Chartered predicts gold prices to reach $3,300 per ounce in second quarter 2025. They're citing macro drivers like a weakening US dollar, slowing rate hikes, and rising global instability. Ryan McIntyre, senior managing partner at Sprott, told BNN Bloomberg.
We first see the resistance for gold at 3,200. And if we see it break beyond that, actually, we see quite a bit of upside from there. People have 100% gravitated towards gold in a physical way. There's really been a lack of enthusiasm towards the mining stocks. I think people really have a visceral reaction to wanting something physical in this environment that's more certain. You know, if there's one trend that we're seeing today is people want something in an asset that's independent from other asset classes, but also independent from other institutions as well.
That comment says a lot about the current mood. People aren't just looking to make gains, they're looking for security. Speaking of security, Germany is reportedly considering something big. According to Babel.ua, officials are discussing the possibility of withdrawing German gold reserves held in the United States. That kind of move reflects growing concerns about sovereignty, and it adds serious fuel to the narrative that physical gold matters more now than ever. Meanwhile, the algorithm from CoinCodex projects that gold price will surpass $3,400 in third quarter and trade just below $4,000 in 2026. That's in line with the institutional forecasts and shows that machine learning models are picking up the same long-term strength. The gold rally isn't just technical, it's driven by real-world tension. According to Bullion Vault, gold prices traded above $3,000 on Monday amid increased investor interest and fresh inflation data from the US, plus new tariff threats from Donald Trump. That's right, inflation is back in focus, and geopolitical instability is once again driving money towards safe haven assets. McIntyre also touched on the age-old question, is Bitcoin a threat to gold? His answer was clear.
You know, gold's got the track record. Gold's got the unique attribute of being physical, which Bitcoin does not have. And it's hard or impossible to create gold out of thin air like you can with cryptocurrencies.
He's not anti-crypto. He just believes gold's value proposition is more tangible, especially in uncertain times. To wrap it up, gold may be pulling back slightly from all-time highs, but sentiment, forecasts, and on-the-ground demand are all pointing in one direction. Deutsche Bank, Standard Chartered, and Sprott are raising their forecasts. Germany is considering bringing its gold home. Algorithms are pointing toward new highs, and investor demand for physical bullion is at multi-year peaks. Whether you're stacking bars or just watching the charts, one thing's clear, the gold story in 2025 is far from over. What's your gold price target this year?